Welcome to Alive with Amanda. We're gonna jump into a scary topic. There was a thread the other day in my private practice collective about the biggest obstacle, biggest struggle that people are facing right now. And I saw it time and time again. Everybody was talking about taxes. And so, I'm not a tax expert, but I do know something about paying taxes. And so I wanted to just share some insights for you around paying taxes and how you can alleviate some of your fears around taxes. Like everything else in this world, you have to be prepared for taxes. When you're a business owner, and especially a small business owner, you have to pay taxes. You're going to pay taxes pretty much directly related to how much revenue your business brings in, minus your expenses. And depending on how much your expenses are, things like rent and, electronic health records and utilities and trainings and these kinds of things. But it's very important that you prepare for taxes. I do recommend that you put away taxes every single month. Put it into a separate account, and that is directly related to how much you brought in for the month. So we follow a profit first model, which recommends that you put aside about 15% in taxes. And so if you were to bring in, we'll do nice, easy numbers. If you were to bring in $1,000, 15% would be $150. And so if you were to bring in $10,000, it would be $1,500. That $1,500 gets put into a separate account. And depending on how you pay your taxes, whether you pay them monthly, if you are on your own payroll, then you pay it monthly. I don't put aside separately for that because it comes out every single month, but I have an S Corp, so I pay myself as an employee. So I do pay taxes every month. And then we also pay quarterly taxes. And then sometimes we pay yearly taxes. So if in that given month, let's say, I'll use the $10,000 number. If I have to pay the IRS that month $1,000 of that $1,500 that we've put aside, I will take that other $500 and put it into another account. Having an accountant is going to be really important. I reiterate this time and time again, and then it surprises me as how many people don't have an accountant. Your accountant can actually tell you how much estimate how much your quarterly taxes are going to be and set you up on a payment plan. And that will make it really easy because that'll tell you whether you need to put away more or less every single month. So maybe you're in a situation where you and your partner combine your taxes, you file together, and you have a higher tax bracket you may need to set aside. If you're in a state that has income tax, you may need to set aside a little bit more money. So this is going to be really specific on your particular circumstances, which is why I think having an accountant is really important. If you're in your first year of practice, at any point, you can always put away more for taxes in that side account. So if you wanted to put away 20% of your revenue a month, so let's say $2,000 in that $10,000 a month number, then if you had extra at the end of the year, great, it's a bonus for you. I remember, I always talk about this, my first really successful year in private practice. And I was paying my taxes like I was supposed to. But we made more money than we had anticipated. And I owed a pretty penny to the IRS. And that hurt. It got me right here. And I was like, man, I wasn't prepared. I paid it. I had, some money set aside. And so, but it hurt. It wasn't fun. And I learned from there to really be on top of my taxes, both really talking to my accountant about any changes that were coming for my practice. Because what happened that year is I can't remember exactly what year. It must have been the year that I went from the full year I was in private practice full time. So in 2013, about half the year I was in part-time practice. In 2014, I was part-time private practice, and then half a year full time. And then I think in 2015 was my full year. And that must have been the year that all of this happened, now that I'm thinking back. And I wasn't quite prepared for, the income that I was bringing in. And so now I have a lot of talks with my accountant, like, hey, we're bringing on these contractors. Hey, we're increasing our rates. Hey, we're going to be changing this in our model, so that he can also understand the changes that are going on and maybe guide me in some of the things that need to be done. If you use QuickBooks, your accountant can also go in and look at your profit and loss sheet, kind of get an idea of how your business is doing. Every quarter might be a good idea for you to do that every quarter. And then you'll have a good idea of like, yeah, you made a lot of money, or no, you had a lot of expenses this quarter. You've saved more than enough. So having a good accountant, having accounting software is going to really help you plan and prepare for these things. I'm going to give you one more tip, but I'm going to first thank our sponsor, TherapyNotes. If you're looking for an electronic health record that is really full service, that can help you really run your practice, whether you do that virtually, you do that in office, whether you are taking insurance or your private pay, they have reminders for your clients. You can do your paperwork there. You can do billing directly from there. Their credit card processing is phenomenal. And what really makes TherapyNotes step out and really shine is their customer service. So be sure to check out TherapyNotes. So the final thing that you can really, think about doing is making sure that your income doesn't vary, throughout the months and how much you're taking in. If you want to be pretty consistent with that, there are ways that you can also, depending on what your structure looks like, at the end of the year, take money from your business if you have a surplus. You just would need to prepare for taxes. So let's go back to that $10,000 number. Let's say you consistently thought you would make $10,000 a month. And so you pay yourself every single month $5,000, but then you start making $12,000 and you don't really have any expenses around that. So now the last 6 months of the year, you've saved up $12,000 additional dollars. You may want to keep that in your business. You might want to take half of that, at the end of the year. And then if you're taking $6,000 additional dollars, then you can prepare for how much taxes that would be. Again, you can do that with an accountant. So I think being kind of consistent with your expenses, your income, we always want our income to raise, so you don't necessarily need to be consistent with that, but how much you pay yourself, how much your expenses are, and really planning is going to be really important. So be sure you have an accountant. I'm here most days answering your questions. I'll see you soon, everybody. Bye.